Silver. Oh yeah, it's popping off. Not at 100 ounces yet, like I predicted, but
soon. I mean, it's so price suppressed compared to the ratio to the gold. That's it. We're gonna wake up one morning and holy cow, it's at $100.
Well, here's an interesting fact about the reality of silver versus gold too. I believe, off the top of my head, someone can fact check me, but I believe only 4 times more silver than gold has been mined in all of history. But the price of gold is, what is it, like 10x or more? Yeah, around 10x, right? So there's like this imbalance of physical versus actual price. There should have been, if we're thinking in terms of physical, then the price of silver should be
hundreds of dollars.
4x. Yeah, or 4 times less is the price of gold. Yeah, that's interesting. All right, so let's take a look. We'll start at the higher time frame here. Should I pull up the 4-hour or daily? What do you prefer, Sean?
Let's look at the daily real quick.
Okay, let's go to the, oh man, it's just straight up. Look at that. That's ridiculous. Okay, let me just remove the drawings there. All right. Wow, look at that. That's beautiful. A lot of opportunity there.
Yeah, of course, you would set an anchored VWAP to that low wick candle.
Okay. Do I click on the bottom of the wick or the bottom of the candle?
You just click on the it'll set it right to that candle. So it's all going to be the same measurement.
Oh, it'll be the same. Okay.
And then you would set it, the 2 black candles just before it. Actually, if you go back and then to the black two more candles to the left, black, that one, set an anchored VWAP there, because that was our previous high that we had to overcome.
Oh, nice. Gotcha.
That was the
man,
high.
they're lining up.
See what I'm saying? How they merged?
Yeah.
And then you don't have under, but it's not necessary because it's going to be almost the exact same anchored VWAP from it's the high before that. So it breaking out here above 35.51 was highly significant in silver. And it did it with
51 is right there, guys. Yes. So it broke above that level. And that is significant. Yeah. Yeah.
Recently, when it broke out of the kind of channel there in the middle with that first big white candle was its first significant break. And then it did it with volume. You don't have your volume on there, but it did it with volume. So we predicted it was going to continue up. It broke that channel in the middle there, great enough with enough great volume that gives it the velocity to test that previous high. And then volume came pouring in.
Right. Let me check the volume. I'll pull up the volume indicator. This is something you guys should have on the chart as well, so we can see that break through the all-time high was some of the highest volume we've seen on silver, and that's generally a good sign.
Right.
Yeah.
So this is an extremely strong move. It will give back. Matter of fact, guys, I have a short order sitting in silver right now. Believe it or not.
Where did you put that at?
My short order is at 36.90.
36.90, and we are getting we might hit that while we're talking right here.
Yeah. Yep. I'm going short. So one of the things I like to do is mean reverting key levels that we haven't seen $37 since 2008.
Wow.
So guess what? There's a lot of sellers sitting there.
I'm
not looking to make a ton of money off of it, but I can for sure make 10 to 25 cents off this short. Right. But here's the thing. And you guys that follow me in my group or in Prop Firm Kids group, when I put these mean reversion plays out there, like look at the last one. I called ES a short at the 6,000 diamond. And I said, it's definitely worth 10. It's probably going to be 100. It ended up paying $250 times your leverage, right? If you followed the whole move. And I missed my entry by 1.5 points because that diamond, that position between the 10 cent short and the 10 cent over of the critical level of 37, you just have to pick a position. I arbitrarily picked one and missed it by basically 1.5 cents. So here I picked the very front side of the diamond, the very beginning of that psychological pricing, because we haven't seen this price in 15 years, 17 years.
Yeah, that happens. I mean, if there's a probability for it to happen, it will happen eventually. And sometimes I miss entries by 1 tick, and sometimes I miss TPs by 1 tick, and it reverses, and my trade gets destroyed. All outcomes will play out in your trading, guys. So, and you'll remember the most horrific ones, but they are actually rare occurrences, and that's why you remember them so well. So just that's just part of the psychological
Right.
issue with trading,
Battle.
right? Yeah,
Right.
yeah, yeah. Okay, so yeah, you have a short here on silver. So I guess like that's kind of the play. If we go down to the 5 minute here, let's just mark up the chart and then see like what you would target for your stop loss and your take profit here. So I'm going to set up a short right where you have it, which is 33.90 is right there. Bang. Okay. And what would you normally do in terms of stop loss for a trade like this?
Well, on this one, I'm going to use the full width of the diamond, so the 10 cents above and 10 cents below. So I'm going to have a 20-cent stop loss initially here, and I'll compress it pretty quick because I'm targeting about 30 or 20, see 25 cents on this one. Had to do my math in my head real quick.
25 cents. Okay. So
Yeah,
it's going to look like this, right? Yeah.
Yeah. Mm-hmm. The daily VWAP right now is at 36.50, so we could get more out of it, but that's how my brackets are set currently, and then I'll adjust it.
So yeah, because we're in real time here, how do you feel about this trade? You have a pending limit sell order here. Price is creating essentially a double top right now, right? Do you ever feel fear that you might miss this trade? Does any part of you want to just get in now?
Yeah, that happens to me often. One thing that I'll do is once it hits a key level, if I missed my price, I'll play the 1 minute cross immediately after that key level as it drops down. You know what I mean? So that where I see I was correct, my price entry was wrong. Oftentimes it doesn't surprise me if it stops at 85 instead of 90. Matter of fact, the high of day is 86. But looking at the upward momentum, I feel like I can get 90 here. I mean, if it doesn't happen while we're on the stage here, I'll report it to the group, let everybody know how the trade went. But because I'm on the very bottom side of that, I feel like there's a pretty good chance that I hit this trade.
Yeah, and I think it's important to know here, guys, like this is one of the things that makes a good trader is where you're going to stick to your entry model strategy and you're going to accept the fact that you might miss it, right? And you're not going to hit it perfectly every time. But if you stick to your entry model strategy, then over time you'll be profitable because you know the system works, right? The problem is when you start freestyling and say, oh, it made a double top. Okay, I'm just going to sell down here. And then it comes back up to where your entry was, where your stop loss now is, and you get destroyed and then it dumps, right? And that will be a terrible situation. So just be patient, let it play out, and just accept the reality. If it doesn't hit, it doesn't hit. There's going to be another opportunity in the future anyway. So it's always so important to kind of stick to your guns there, in my opinion.
I 100% agree. Once I develop a trade plan, I stick with it. And more times than not, I'm correct. When I deviate, that's when I get burnt. So I don't deviate.
Yeah. And how do you trail the stop loss on a trade like this?
So, again, I'm widest as soon as I enter that. On this one, I mean, on a typical mean reversion play, like what I tell my guys, especially on funded accounts, is that as soon as if we're hunting 10 cents on this, obviously we're hunting a little bit more because we haven't seen $37 in 17 years. But if this is a price we've seen in the last 6 months, then I'm going to hunt 10 cents. But here, once the trade is 5 cents in your favor, there's a good argument just to go par, zero risk your trade, and then try to get between 5 and 10, right? Okay. On this one, once it pays 10 cents in the money, I'm going to go par, zero risk my trade.
Okay. So about there. So about if once price enters, let's say enters perfectly, and then it goes 10 cents into your profit, then you move your stop loss to break even.
Correct.
And
break
then
even or what I call it. Yep.
Let's say it dumps. And are you going to keep your take profit at this level, or are you going to expand that and then just continue to trail it as long as you can by 10 cents?
So you're never going to go broke taking profit, right? But again, this is slightly different of my mean reversion plays due to the fact that it's been 17 years and not 6-8 months since we've seen this level. So I'm more apt to want to trail it. Might be able to get as much as 45 to 50 cents out of it, or we could go back and retest that breakout level that we saw on the wider time frame. So trailing it, to answer your question, trailing it has a better potential for greater profit, but I'll zero risk that trade once I hit 10 cents of profit, just in case I'm wrong.
Right, guys. And another important thing about trailing take profits and trailing your stop loss behind price is that you'll never time the top or the bottom of the move perfectly, right? You're always going to leave profits on the table, and that's the psychological hurdle you have to cross when you're trailing profits. If you want to set a set stop or a set take profit, like let's say I wanted to set a set take profit right at this level, then maybe price will come down and sniper exit and then reverse hard. Like, we don't know, but that's why there's good things about both plays, right? A set take profit, sometimes you'll get those epic perfect sniper exits where you get your take profit, and then with trailing stop loss, sometimes you'll just catch these big beautiful moves, right? So they both have pros and cons. I think it just depends on how you like to trade. Sean likes to trail, and I like to just set straight TPs. That's what I always do. So there's no right answer, right?
If this was a normal mean reversion play, then I would have a clean take profit exit at 10 cents, right? But because this is a level that has been seen in 17 years, I think the potential is greater to get more than 10 cents. So I in general agree with you.
Yeah. And I feel like it's just a little bit easier for if you're trading, because it's one less thing to manage as well. If you have a T, and the biggest issue that a lot of retail traders have is micromanaging the trades, and trailing stop loss involves a lot of micromanaging if you don't have a set level plan to trail that. So if you're struggling with psychology too, I would highly recommend just leave the trailing stop loss out for most of your trades and set a set TP and let the price come down to that TP. Just let your profit run. That's it. Okay, so that's nice. Silver's looking good. And wait, did you hit it, Sean? Oh, you were so close there. Yeah, Sean's trade is right here, right? Yeah, you're there.
Yeah. Missed it so far by 4 cents.
Yeah.
But you see, it's in that zone that we drew. So you just have to pick the arbitrary price.
Yeah. And that's why entry zones are kind of nice too, guys. If you're ever marking up the chart, use this zone tool. And then you can set your, if you want to be aggressive, then you can set your entry at the very start of that zone, right? Or if you want to be conservative, you can set the entry at the very top side of that zone. They're both good. It depends on what you can handle mentally. The further deeper into the zone that you set your entry, the stronger mentally you need to be.
Right.
Right.
Yep.
Yeah. Okay, right on.